quiet note, but for the week, the Nifty and Sensex ended over 0.5% higher. But for the month of November, Dalal Street recorded its highest monthly gains in the entire year FY20. Hello and welcome to Taking Stock, the show where we will review the week gone by and prepare you for the next trading week, which is going to be a truncated one. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Lata, hi. We got a midweek scare, but that got bought into in double quick time, and we've ended in a pretty comfortable kind of a zone. Let me quickly take our viewers through what we have lined up on the show. Anu Jain of IIFL Private Wealth Management will join us shortly with a quick technical view on things from here out. Pramod Gubbi of Marcellus Investment Managers gives us his view on the week which has gone by and what lies ahead of us. We bring you opinion we got through the course of the week from the likes of Nilesh Shah of Kotak Mahindra Asset Management Company, Ajay Srivastava of Dimensions, Dheeraj Sachdev of Roha Asset Management. You will hear from all three wise men in just a bit. But before we get to all of the opinion, a word on the market themselves. Lata.
Well, I've called it the week of the week. Those that didn't perform hitherto performed, for one, the small cap index. That was the outperformer. The big performance came from the small guy. That index was up 6.3%. And the mid-cap index ended almost 4%, 3.97% higher. Within that, even sectors like PSU banks, not your normal big performers, realty stocks, the hated ones actually, they were the ones that came out and performed. And another theme that stood out was commodities. Globally, both crude and base metals did very well, and you could see that reflection on India as well. However, at the end of the month of November, some questions fall on our plate. There was a huge amount of FII buying. Almost 60,000 crores came in the month of November. Now, part of it at least was because the MSCI index has been rebalanced and India was to get some money anyways. And a part of it was because EMs in India were seen as undervalued. Now, will that continue? That would be a question that December will answer for us. The MSCI rebalancing is over. We are not as attractive as we were perhaps at the end of October. And, FIs could take a break. So there are all those questions on our plate. Before I get to all that, Agam, you want to take us through the leaders and laggards of the week itself?
Yes, absolutely. So this was a week where we saw a lot of laggards catch up with the rest of the markets. And some of these names would include something like an Adani Ports, which was, along with ONGC, the top gainers as far as the indices are concerned. We had Tata Steel, Tata Motors and Indices also advance on a weekly basis by anywhere between 5.5% to nearly 8%. In terms of losers, we did see some rotation out of stocks such as Bharti Airtel. HDFC Limited was another one, and we saw some amount of weakness in BPCL and HDFC Life. Let's also talk about the broader markets. Some surprising names coming up. So Orissa Minerals caught up by as much as 26%. 21% gains for L&T Housing, Finance Holdings, Kesoram Industries, CG Power, of course, on the back of the news on acquisition, and Cummins India also catching up with the rest of the capital goods sector. And on the losing end, we did have some weakness in GE Power. Interglobe Aviation, along with PI Industries and Trent, also seeing some profit taking, but on the whole, it's turned out to be yet another good week.
Oh, absolutely. Well, we end a good week and a good month, but Prashant, to you, tell us the red and green flags for the week that will be.
I don't know if it's a red flag, Lata, but when we come back next week on Tuesday, there will be a change in the way clients, people who are trading in the market pay margins. So something called peak margins will come into play. We've been sort of telling our viewers through the course of this week that this is happening, explaining this in detail. Basically, if you're trading in cash or futures and options segment of the market intraday, the margin that you will need to do that will go up depending on what you trade. It could be index futures, it could be stock futures, options, whatever. You'll have to bring more money up front when you're doing intraday trading in cash and futures and options segment. One thing which struck out on Thursday and Friday was that the second tier financials are starting to outperform. Names like Mahindra & Mahindra Financial Services, Chola Finance, big 6-7% gains over the last 2 days of the week. You can go down the list and you saw that action. Why is that happening? It looks like that this entire cost of money going down, that trade is moving away from tier 1 names to tier 2 and tier 3 financials as well. And, why just financials? I think it will percolate further down into companies where borrowing costs have been higher. They can refinance at lower rates and, get that benefit. So I think this is a continuing big theme, which I think should last into the week as well. RBI, by the way, there is a meeting lined up later next Friday. RBI is, the expectation is that it will be a status quo meeting. So, the environment for liquidity remains quite benign, and that's been a big positive. Globally as well, Lata, things remain pretty constructive, right? There is ample liquidity, vaccine hopes, of course, out there. And it now finally also does look like the President Trump has decided to go quietly. Well, not so quietly, but finally it looks like he's said that, he will accept the verdict of the Electoral College. So that's essentially the global picture as well, which is supportive. So, no real hiccups in that sense. The flow of funds, what you described in the month which has gone by, will that continue at the same pace? Can it continue at the same pace? That remains the big question.
Oh, yes, certainly that would be a question. But how is the market positioned, and what are the technical supports and resistances? We are joined by one of the best in the business, Anu Jain, Senior Partner and Head of Equity Advisory and Brokerage at IIFL Private Wealth Management. Anu, pleasure having you with us today.
Hi, Lata.
The first question is, how is the market positioned? The handover from the November contract seems pretty heavy. A lot of FII longs, I think 77% longs got handed over. So do you think that we are good to go past that 13,150 thereabouts? Or do you think we're going to meet some near-term resistance?
So in terms of rollover, Lata, the rollovers for Nifty have been pretty decent. It's at about 79%, which last month was 78%. So I think that is a good sign. If you're looking at levels, your 10 days at about 12,895 and your 20 days about 12,550 arounds. If we look at support levels, and which have been adhered to even on Wednesday when we had a bearish engulfing formation, that's at about 12,730. As you said, we made a high of about 13,150. That is going to be challenging for some more time. If we do cross that and we hold that, then you can have about 2 to 3% more. We've been looking at global indices also, and all of them are showing a movement of 3 to 4%, and that is in line with what our bigger indice, which is Nifty, is also showing. Beyond 3 to 4%, as of now, there is no big clarity. As you also were saying that, we're entering the month of December where FIs generally go quiet, and we've seen a breakout happen, as Prashant was saying, on the second tier stocks, which is either from banking or from non-banking. And we saw that 3 days, 4 days back, that breakout on the Midcap index beyond 18,400. Now that is a point where you are getting the 20-day moving average also, and you're getting a breakout for the Midcap index. From there, we've rallied till about 19,700 today. So that seems to be the place where the trade seems to be focused for the next maybe a month or so. So I would say that probably Nifty, until and unless Reliance decides to wake up from its slumber, you will see probably the mid caps kind of take it from here.
If you had to express that view on the Nifty mid-cap index, where would you see that?
So you have again there, roughly about 20,100 to 20,300 as a resistance forming, kind of a point. And if you look at the 1 year thing where we were and we are still, that could be much higher, 21,800 odd. But right now, the near-term resistance would be roughly about 2,100 to 2,400. So that's the point where you will meet resistance. But the kind of action we saw yesterday and even today, when Nifty was pretty quiet or even went into negative zones, there was consistent up moves throughout the day into the mid-cap index, which is indicative that there is strength building up there.
Okay, well. Anu, I wanted to ask you about metals, because Nifty metals soared over 5% this week. And it was not just metals, actually it was an extension of commodities itself, which did very well globally. Manisha Gupta, our commodities editor, is here to just present the key reasons, and we want your view on levels on certain stocks. Manisha, tell us.
Well, yet another week where we have seen very strong gains continue for the base metal prices. This actually is an 8th straight month for the month of November that the base metal prices are headed for a stronger gains here. So much so that you are looking at stronger economic data that has been supportive. It is about the vaccine optimism, the run-up in equities, cheap, easy liquidity and the speculative long positions which have continued on the higher side clearly have been supportive. And then you have supply disruptions in various mines in Latin America which also have done their due. Copper clearly has been an outperformer. We are looking at a 7-year highs on LME and the Indian copper prices have hit an all-time highs in this week. 70% of gains is what we have seen put in from copper from March lows. This clearly has been an outperformer and we have seen nearly 30% of gains in this year until now. If you look at the second and the third metal, then that has been zinc and then nickel. Zinc is gained up by nearly 23% in this year and nickel up by 15% as well. Nickel actually is trading at a 17-month highs, zinc at a 12-month highs, aluminum is trading at a 3-year high. So wherever you look, it is a multi-month to multi-year highs that the base metal prices are putting forth. And the expectation is that you could see further gains from here. We haven't seen any banks or brokerages still give a cautious or a short sell from here. It still is a buy on dip strategy that continues for at least next couple of months.
Okay, Anu, would you play that theme? Not just metals, but not just Tata Steel, Hindalco, Vedanta, SAIL, JSW Steel, JSPL, but also all the gas and oil themes. I think you're on mute, Anu. Anu, we can't hear you.
Sorry, that's the problem for the year. Okay, so gas utilities we saw play out today in a very big way, whether it was IGL, whether it was Mahanagar Gas or Gujarat Gas. I think if one is looking at an investment grade long-term stock, I would still stick with that. And I think there is still space for 20 to 25% on the gas utilities. When it comes to other commodity stocks, I think the safest I would look at is Hindustan Zinc, and that is looking good. That basically, if you look at it, the 50-day moving average is at about 216, 20 days about 220. It's just given a breakout today from those levels at about 230. I think that is where trade can kind of take place if you're looking at a trading position. As I said, for investment, probably a Gujarat Gas with a 1-year viewpoint for a 20-25% gain seems to be the investment call. So yes, we are positive on the sector. It is more the trading side which will move faster. So I think Hindustan Zinc as a trading call seems to be, with a stop loss of about 3%, would probably do a better trading call out there.
Anu, you have 3 stocks where you think one can take positions. Quickly, if you can outline them.
Yeah, so Prashant, as I was saying that, this is the mid-cap area where we are looking at. So we have chosen more mid-caps than large caps. The 2 stocks that we're looking in mid-caps is basically Balrampur, Chini. In fact, the sugar stocks are looking good. And we've always seen when mid-cap takes up, it's sugar and some of these stocks which pick up. Now, this stock has been consolidating between 140 to 165 levels. If it does move and give a breakout beyond that, somewhere between 190 to 210 is what you could see in a month and a half. So that is one stock which is showing promise on the charts. JB Chemicals, on the other hand, has been around 1,000. And there it's looking that, with the kind of momentum we are seeing, a 10 to 12% move out there also can happen because the RSI is showing a bullish range shift. So we can probably see that it moves out of the consolidation. On the large cap, obviously, this is a little more number oriented. We'll get around the numbers for all the auto sales. But Maruti has been consolidating and hasn't participated in the last couple of weeks. It's a range of 7,200 arounds on the top and 6,750. If it does break on the positive side, and that would be, we have to wait for a breakout, you'd probably see a roughly 6 to 7% move coming onto that, right, possibly up to 7,600. So I think these are the 3 strategies that we would look. Yes, as Lata was saying, probably on the commodity side, Hindustan Zinc also looks good. And my trading team tells me even SAIL is a good bet out there. So those are things you can probably play for the week and, probably take positions on Tuesday.
Let me squeeze a quick one. Anu, the PSU banks were the outstanding performers this week. Does that continue?
So as I said, and as you were pointing out, Lata, it is more a question of now people seeing what hasn't moved and what can move. So it is a question of people just moving from there. So if you look at that, yes, that play continues. And it is just not PSU banks. If I were to look at the way this week panned out, I saw how RBL moved. So RBL has given some very strong moves, even a Bandhan for that matter. So if I were to look, it is just buying beta rather than just buying, the safe stocks which have worked till now. In terms of PSU, obviously, the best and the safest to play would still be SBI. It's closed marginally negative today, about roughly 0.5%. And I think what you can really look at is that there is a margin of safety out there that supports are close by at about 235, which is 3-4%, and the 20-day moving average is also about 230. So if it were to hold on to that, you can probably see another 4 to 5%. But that would not be my prime trade for this coming week. As I said, if I had to take risk instead of a PSU bank, probably metal make more sense.
Anu, thanks very much for joining us. Great speaking with you, and thanks again for running us through your sort of setup for the coming week, some individual trades as well. Time for a quick break here. We come back. Pramod Gobi of Marcellus Investment Managers on fundamentals.